It is
3 minutes.
3 more minutes.
Okay.
I do have a presentation. Let me share that. Okay, by that time they would join. Right, we will start with.
Yeah. Okay.
Hello,
Sir. Yes, sir, it's visible.
visible, but I am not getting it. Yeah, yeah. Could you see it? No problem. Hello,
Yes, sir.
Problem now, sir.
Perfect, sir. Visible.
it's visible. Right. Okay. So today, uh, for the coming 1+hour, I'll share my thoughts on finance research. My thoughts to the extent which feels rational for me out of my experience, my experiences, my observations, and so on. So I have tried my level best to blend rationality and also facts into this session, because finance research is facing some issues, especially among developing nations, because of the lesser interest, the meager number of people who are coming for finance research, and so on. We will discuss these points later. So today's session, I think the slide is changed, right? To the second slide. What do you see now?
Yeah. Yes, sir. It's second slide. Okay.
Yeah. Let me give you the scope of the session today. First of all, I would give some input on what about the global finance research? How can you gauge global finance research? What are the parameters for gauging it? Then we will look into the finance research in the Indian context. Then we will discuss some points on the research areas in finance. Then I'll give a small start as some of the steps, initial steps in finance research. And when you indulge into the finance research, you may come across with economic models. Economic models I call because that models are specified for measuring something. That is why economic, it doesn't mean that something related to macroeconomic or microeconomic variables. No, it is related to, even in your HR, you can have economic models for measuring something. So the economic model, and that model, when you convert for measurement, it becomes econometric model. So economic model and econometric model, we will see with one or two examples. Then we will discuss the barriers to finance research in the context of developing nations. Then a roadmap to finance research, especially in the developing nations context. And I'll make my concluding remarks. So this is the order in which we would be discussing the roadmap, the entire session, a roadmap for finance research. So I have given here a number of theories. Sometimes you may be finding it difficult to read all of them. My intention from your part is not to read all these, but what I am trying to tell you, these are some of the theories in finance. So, what I am trying to convince you here is if you want to gauge or assess a domain like finance or economics or physics or chemistry or HR operations, whatever it may be, how do you gauge? You will gauge those domains depending on the theories available with that domain. I'm not claiming that each and every domain is equally flooded with theories. No. There are domains wherein lot of theories are there, but there are domains wherein the research is a little bit lower, and therefore the theories, the magnitude, the number of theories are lower. But if you consider, if you take finance, the finance field or domain is flooded with large number of theories. So how can you gauge if large number of theories are there? How can you say that the domain is rich in terms of quantity and quality? Sometimes if more number of theories are there, okay, the magnitude may be higher, but how can you say that? How can you say about it or gauge about the quality of that? So if you take the finance finance domain, the theories, the most familiar are with regard to capital structure. Everybody may be knowing about it. And the theories in the stock market, the theories regarding stock market behavior, everybody is knowing. It is more popular and more familiar to us. So if you consider those theories, the theories are actually, what exactly theories are telling you? Theories are the net costs to understand the world around you. If it is related to finance, the world around you in finance, related to finance, you will be capturing through theories. For example, the capital structure theories, which speaks about the two financial variables, one leverage ratio and the other one market price per share, which explains the relationship between the theory, the capital structure theories are primarily explaining the relationship between these two variables or two or three variables. So theories are explaining the relationship between variables. So it is through theories we understand, we conceive each domain. Each domain we understand through the finance domain or whatever be the domain, we would be understanding each domain. The world around, all the domains together, you can call the entire universe or world we capture using or with the help of these theories, because theories are explaining the relationship between variables. So if you look into the finance domain, as I said, there are a lot of theories, and no financial variable is left untouched by these theories. So to that extent, you can gauge the global finance research or the global finance domain through research is rich in theories, no doubt, because it has been acknowledged by experts. I'll tell you, it has been acknowledged by experts. No dearth of theories. So one of the parameters for gauging the global finance research is this: the volume and also the quality. How can we talk about the quality of the theories? You listen. If you take the Financial Times 50 journals, top 50 journals, okay, you can journals in finance and accounting. You can see that 12 journals are out of the 50. 12 journals are in the domain, including Journal of Finance, Journal of Financial Economics. These are all the 12 journals are out of the top 50 Financial Times journals. 12 journals are in finance and accounting. This is the top 50, the list of top 50 journal is a quality aspect. It is a quality aspect. Otherwise, you won't call it top 50. So out of the top 50, which have listed nearly 10 domains, journals coming from nearly 8 to 10 domains, we could see there. Out of that domains, 12 out of the 50 is from finance and accounting. So it is a quality parameter. And if you take the ABDC list, Australian Business Deans Council list of journals, they publish in the domain finance, business and taxation law, economics.
Hello, sir. Hello.
This one, right? Hello?
Yeah, this one. This one, sir.
Yeah. Okay. Sorry for the interruption. So I'm talking about how can you, the first point which I would like to convince you about the magnitude of finance research, globally, what exactly the magnitude of
Sir,
this finance research.
you have completed this theory and you started. Sir, shall I interfere? So you
Yes,
finished this thing and you started the next slide. That means the ABDC index also, and you explained the this slide also you have finished. So previous slide.
This one.
Previous. This one was the last slide.
Yeah, this one. Okay. So what I'm trying to tell you, how can you gauge global finance research? How can you conceive what exactly the quantity and quality of this finance research? You can, in terms of in terms of the number of theories which explain the relationship among the financial variables, and the place where or the journals where it appears, and what exactly the size of or the number of dissemination platform available for these finance research. That is what we were discussing. So in this ABDC list, which has a rating A star, A, B, and C, it has already listed, already given a source list of 2,682 journals, and out of this, a sizable number of or considerable number of journals are from the domain of finance and accounting. And if you look into the Scopus source list 2019, nearly 40,000 Scopus indexed journals are there. And out of that 40,000, 1,252 journals are from the domain of economics, econometrics, and finance. That is also a good number. So if you take all these parameters, or primarily two parameters: the number of theories, which establishes the relationship between financial variables, and the platform available for dissemination of those research results, and the peer reviews available for dissemination of these results. That is something, the indicator of the global finance research. So how the people who are, or the experts who have serious deliberations in the field, especially in the financial economic field, how do they view this finance research in its entirety? This is a best example. This Michael Jensen, an American economist who is in HBS, Harvard Business School, he once opined, there's no other proposition in economics which has more empirical support than efficient market hypothesis by Eugene Fama. So what does this convey? This is an opinion of a popular economist. And what does this convey? This can be taken as an acknowledgement, in the sense that he was talking about the empirical research in finance, which has been carried out by finance researchers globally to test this efficient market hypothesis. Okay, and his initial work, efficient capital market, a review of theory and empirical work, the 1970 work by Fama, it has 33,523 citations in Google Scholar. The previous work, the behavior of stock market prices, it appeared in Journal of Business. It has 13,634 citations. Okay, so like that, if you look into, I have just cited the market efficiency, long-term returns, and behavioral finance, the more latest work. It was in 1998. It appeared in Journal of Financial Economics, Journal of Finance, and Journal of Financial Economics. You don't forget two very, very important quality journals in finance. So these four works altogether have citations near passing 50,000. So what does this mean? The theories available in the field of finance have been empirically tested by researchers all over the world. So if that is an indicator, the global finance research is rich, you must say, in terms of these parameters. The global finance research, you can come to a conclusion, a rational conclusion, that it is rich in terms of theories. It is rich in terms of platforms. For I am telling you the importance of a publication platform, because recently this Covaxin has come up with the Bharat Biotech company, when it came up with a claim that the Covax has 81% plus efficacy rate. I did see one panel discussion in NDTV, and one of the panelists were raising a question. Okay, whether this is the claim of the company, the 81% efficacy is a claim of the company. What about the peer review? Whether it has been peer reviewed by experts, and whether it has been appeared as a published one anywhere else. So that is what is the importance. Once you have a research, and when it gets peer reviewed and be published in terms of black and white, or published in a platform of a credible platform, that is what is a quality indicator. So the publication platform is very important. So you can assess a domain, the growth of a domain, the magnitude of a domain, the quality of a domain in terms of this. So if you consider these parameters and try to assess the global finance research to the extent I feel, I would say it is rich in all these terms. But if we look into the contributions, the contributions in the field of finance, you could see that it is highly skewed towards US and other Western nations. It is not so in the case of finance. Not only in the case of finance, in all other domains, this is quite natural. Even Nobel laureates who have come up with some form of comments that the East or Asian nations or people from Asian nations are not competent contribute fundamentally to a domain. That kind of criticism have come. I'm not taking that into consideration, but what I'm trying to tell you, it is quite natural. It is because there are a number of factors which tells you about the growth of research in those nations. So here we could see, if I take my views on it, I can tell you that the skewness is more in the case of finance research. It is more in the case of finance research. And I was thinking, what exactly a relief for a relief? Do we have somebody else to project? Do we have somebody else to project in the field of finance? Okay, many people are no doubt, many even in many of our national institutes and other institutes which are related to finance, they are doing well, no doubt. We people are also doing well, no doubt. But to the stature of a Nobel laureate, or to the stature of a list of people which can be considered as the top 100, that if we take a list of the top 100 people in finance, experts in finance, whether one could appear from India in that list, that is a fundamental question. So I was just looking into the Nobel laureate list. So normally we will come across with two names. One, Professor Abhijit Banerjee, whose Nobel has been given a Nobel Prize in 2019. He's from Mumbai with US citizenship, and he's into the development economics and social economics. And Professor Amartya Sen, Nobel laureate in 1998, he's also into welfare and social economics. So even though to the entire economics, financial economics is part of economics, it's branch of economics, that I agree. But still, those two Nobel laureates, they were deliberating seriously on development economics and social economics. But their touch in the financial economics is almost nil or meager. So in that sense, or in that indicator, or in that sense, we cannot claim something to the field of financial economics from them. But I'm giving you a name which is more discussed in the finance field, and also we are more familiar to Professor Raghuram Rajan. He was governor of the Reserve Bank of India. Okay, he has his PhD with the doctoral advice of Professor Myers. a professor of financial economics who popularized the pecking order theory. So we can you think about Professor Rajan, who got the opportunity to do his PhD with one of the contributors, which I listed in the second slide, who contributed or who popularized, better I would say, who popularized the pecking order theory, and under him, Professor Raghuram Rajan took his PhD, and he has been given this recognition because in how do we project, or how do we how can we say that we have our own contribution or Indian contribution? I'm talking of not only about India, but I'm talking about the Asia in general. What about the contribution at a global level by our financial economists? So here, this is a recognition he has been given Fisher Black Prize by the American Finance Association to the financial economist who has made a significant contribution to the theory and practice of finance. This is a recognition, sure. This is but this is a good one. Okay, how many people or how many financial economists from the Asian nations have been given with these kind of recognition, or are able to grab these kind of recognition is a big question. Okay, his popular work, I don't know, I would say that you could see a number of people who have done capital structure theories as part of their, who have taken care of capital structure theories, and they have brought what are the determinants of this debt equity ratio, and also what exactly the relationship between the leverage ratio and the market price per share. Many researchers, even those who have joined here for this webinar, have done on this. But a question here is, did you go through this work of Professor Raghuram Rajan, which has received nearly 10,000 citations, nearly 9,671 citations? It is, what do we know about capital structure? Some evidences from international data. This is all about the determinants of the capital structure. So this name, I'm not putting up this as a tall claim, but there are experts who have serious deliberations, even though a few in number. But I'm not neglecting the research happening in the Institute of National Importance, or a National Institute and other state institute in the domain of finance. But still, I am telling, I'm taking a stature wherein the contributions which will give a recognition at the global level, who could contribute. This Professor Raghuram Rajan, he could even predict the global financial crisis in 2005 or 6. And he did receive during that time, when he was predicted about the vulnerabilities in the field of finance. Many people try to put many blames on him about his comments, but later, within a span of 1 or 2 years, the things have materialized. What he spoke or opined was came true. So that kind of a stature, what I am telling. Then Professor Viralajarya, he has his three famous work: asset pricing with liquidity risk, measuring systematic risk, is cash negative debt a hedging approach. This has received reasonable number of citations. Professor Viral Acharya is also a global icon in the field of finance from India. Then one name which is very important, because I have given a URL here. You can visit the website. I mean this bio web of this Ashwath Damodaran. It is very interesting. You must visit that one. Okay, he's professor of finance at Stein Business School. He teaches corporate finance and valuation for this MBA program. And he received MBA from this university. The details are there. But the very important thing is his research papers have appeared or published in Journal of Financial and Quantitative Analysis, Journal of Finance. Journal of Finance is wherein the Eugene Farmer's 1970 paper appeared in Journal of Finance. The Markowitz modern portfolio theory, it appeared in Journal of Finance. So you think about Journal of Finance and Journal of Financial Economics is in the field of, in the domain of finance, it is highly qualitative one. So if you look for a publication in Journal of Finance and Journal of Financial Economics, it is worth. But how can we do it? And in his bio website, you could see that, though I am sure that he claims that my research papers have appeared in these quality journals, but I'm sure that the list of people who have read these articles is a short one. So it is his views. Okay, even though serious deliberations in the field of finance have been done, the number of people going through it is small or short. That is what is his opinion about his research in finance. So I have given the three names to indicate, to give some picture about our Indian hand in global research through these three people and their contribution. So let me come to, when you think about research in finance, what are the primary areas where you can think about the finance research or finance research is happening. Primarily, it is happening in the field of corporate finance. Corporate finance means we will talk about three decisions: the financing decision, the investment decision, the dividend decision, and these are the decisions which are the areas connected to corporate finance. So the investment, these how the different financial variables when it comes to the financing decision. It may be the leverage ratio, it may be the cost of capital, and all these financial variables involved in these decisions are how they are interrelated. How they are interrelated is the crux of the area, the crux of the financing decision in corporate finance. And when you take the dividend decision, you will be establishing what exactly the relationship between the dividend payout and the market price per share. So when we teach, we will explain all this, but whether we would be giving a spark to those who are in front of us with the empirical aspects or the testing of these aspects as part of your research, we won't speak about that. That part we will deal later. What I am trying to convince you, this is what the areas, the sub areas or subtopics involved in corporation finance. And when you take international finance, you will be most of the time you will be dealing with foreign direct investments, exchange rates, and so on. And in the case of financial market, you will be dealing with the different the strategies, the behavior of stock prices, the behavior of bond prices, the strategies in the anomalies in the stock market and bond market, and so on would be the research research problems with regard to the financial. In the case of financial intermediation, also you would be discussing with the system and instruments for channelization of money from the surplus unit to the deficit units, and also the influence of psychology on the behavior of investors, the irrationality or the bias associated with investment are dealt with in behavioral finance. And we will also have deliberations on empirical investment and also theoretical asset pricing. We do discuss the CAPM, capital asset pricing model, and you can show about the dynamism in the field of finance by giving the best example of this asset pricing models. First, the single factor model CAPM we will discuss, which is risk-free rate plus the standard deviation, the beta times of the excess return, the return over and above the risk-free return. That is the expected return from an asset. That is what is the crux of this single factor model or CAPM. And then you just think about pharma has come up with a 3-factor model which computes the expected return. Carhat has come up with the 4-factor model. Again, pharma and French came up with the 5-factor model. So this is the dynamism. What I was telling in the beginning. How can you gauge a domain? So globally, if you see, this domain is highly dynamic because this is an example. So asset pricing, we have started with single factor, and now we do have the experts in the field have contributed even 5-factor model, which will beautifully explain the excess return with regard to an asset. Or you can compute the expected return from an asset with that. All these are coming under the umbrella of financial economics, because it takes care of the interrelation of financial variables such as prices, interest rates, shares, etc. All these what I said with regard to the scope of finance, research in finance, it deals with the total area you could put in one compartment, and you must call it financial economics. Financial economics. When you deal with this, you must have the courage to say that it is exactly the scope of financial economics is this one, what I have given on the left side. It doesn't mean that only this one, only what have been listed there as financial economics. You can, I have just given some of the important areas wherein under the umbrella of this financial economics. And it must be very careful. There are some wrong claims by researchers. Nowadays, it is wrong. Suppose somebody else, some researchers may claim that they have taken or they have pursued the perception on some financial variables sometimes. Because what I'm telling you, I had a discussion with one researcher who was pursuing on his research on GST. And he was claiming that I'm doing research in finance. And what exactly he was doing, he is taking the perception of the traders about filing of the returns, about some other intricacies involved in this. I do doubt, can it be considered as a research in finance? Simply, if you pursue the perception of something, a research in finance should address, I would say strongly, a research in finance, or if something, a serious deliberation, if you could call it as research in finance, it should address the interrelationship between at least 2 financial variables. at least two financial variables. Otherwise, I don't know how can we consider it as. Okay, simply if you take the perception of something, perception about something on something, or some, even though it is a financial variable, how that claim works, I don't know. But simply you must try to understand the financial variables. When the financial variables are taken care of and their economic measurement is happening in your research, you can claim your research as a research in finance. Yes. So how does an empirical research in finance be structured? Okay, this is not something new. It is, everybody knows. You have to have a careful formulation of a question of interest. You must have a research question. And what does that research question? The question must deal with testing certain aspects of a theory. What I am trying to tell you, research is a journey from known to unknown. So I have told you, it is through theories you understand the world around you, whether it is finance, whether it is economics, whether it is operations, production, whatever in physics, chemistry, you would be knowing all these from the theory. Theory doesn't mean that something labeled as theory. Theories are those which established a relationship between variables. So if you consider research as a journey from known to unknown, what is known is theory. So you must start from theory. And or it must pertain to testing it. Theory means there you will be handling theory-led variables. What I am telling you. If you choose a theory and you try to test it, you would be dealing with the theory-led variables. But what I'm telling you, you can go or you can pursue or you can proceed with your research with common sense variables, no problem, common sense variables. But you must give a link. If you start with a theory and theory-led variables are tested, again, you would be either validating the theory or you will be refuting the theory, and if you start, then there is a forward linkage is there. Either you refute or you refute or you validate the same thing, no problem with evidences. It is a forward linkage. What I am telling you, you would be having a backward linkage in the sense that you can start with common sense variables, and finally those common sense variables as proxies, you can give a backward linkage to the theory. Start with common sense variables. Sometimes you may not be connecting them to the theory. And finally, you have to connect it to some theories by having a backward linkage. Otherwise, I don't know how can somebody peer review your, because if somebody is peer reviewing your research output for publication or whatever maybe, they have a strong body of knowledge through theories, so they have to relate things with those theories. So if you have common sense variables, no problem, but finally you have a task to relate it with a theory. Otherwise, how meaningful it would be, a big question. So if you take theories in finance, you can see that the theories in finance explains, you can say it explains relationship between financial variables. And as I said in the beginning, it is through theories you understand the financial world around you. So I have listed some those who are doing in stock market investment. You must first go through the theories. I have just listed some of them. So you have to, because the theories will tell you relationship between variables. You can start your research, or you need to start your research from these theories. Because it already explains relationship. It is explaining the relationship between financial variables, and that will give an eye for a journey from this known to something further, what you try to add to the existing body of knowledge or existing theory. So I'm not detailing each and every one. So what I am trying to tell you, empirical research in finance, it can be used for testing a theory, or it can be used for estimating some relationship. As I said, you can have some common sense variables rationally chosen, and you want to test, and you strongly believe that there is some relationship. Okay, finally, when you take numerical numbers, each numerical number is whether it is relating to one variable and another variable. These numerical numbers may have some relation. It doesn't mean that the variable by its in essence are related. No, never. So if you want to estimate some relationship, using financial data, the common sense variables chosen by you can be tested, or you can test the theory-led variables. Those research you can call as empirical research in finance. So empirical research in finance, in a nutshell, it involves a testing of a theory using the financial data, or it is trying to estimate some relationship between variables. Some relationship between variables means the common sense variable, which is rationally chosen, which could be justified by the researcher, and ultimately he's trying to have a backward linkage to the existing theory. That alone can be called an empirical research in finance. So if you ask me what exactly the first step for finance research, normally we all will say that it must begin. Normally, I would say that it must begin with from a formal theory. An informal theory can be there. Informal theory, it means that if you come up with a relationship which is not supported by a theory, you can call it an informal theory. You can go for its empirical examination, no problem. But ultimately, simply some numerical numbers are related. You cannot claim that by in its essence, these two variables are related. That is a big a flow with regard to this common sense variables. So this research in finance, I would say it most of the time begins with theory, because research is journey from known to unknown. The theory will tell you what exactly is so far known. So theories, moreover, theories are considered as scientific knowledge because it allows, or it is subject to falsification, or it admits a falsification. It means it can be refuted with your empirical evidences. Or you can come up with, as I said earlier, informal theory, or you can come up with common sense variables to test. And finally, you can add to the existing body of knowledge. One condition is there: you must have a linkage to one of the existing theories. Otherwise, there is a big question mark there. How? Especially as far as a peer reviewing person is concerned, how do he relate it with the existing body of knowledge? That is a big question. So when you go for publication in finance, or wherever it may be, you must be very careful. A strong theory basis. A theory, what I mean is the existing, what exactly the existing body of knowledge has to, existing body of knowledge is housing. That is what is the theory. It doesn't mean that something to be labeled or the nomenclature theory would be, the theory in inverted comma would be there. No, it means that already established a relationship. A theory base is essential for a quality publication. So whenever you come up with an empirical result or empirical study output, and if you have to get it published, quite normal. The journals which I explained, which I listed in the previous slide, it is. Those journals are high-end journals. Even you have to look for B-rated or C-rated journals. This theory basis, because it is, you have to have a journey from known to unknown. So this theory base is very, very important. Okay. Yes. So when you have a research question with financial variables to be tested, you have to have an economic model for that. You have to have an economic model for that. So this can be considered as another step for this one. You have to start your research choosing some theory. Okay, you can go for empirical testing. That's what I am telling you. And when you go for testing, you have to have an economic model for that. So I have just given an example here. It may be familiar to you, familiar to most of you. Okay, so I am examining, or I want to examine the determinants of capital structure. CS means capital structure. So I have to examine the determinants of, or I have to find or identify the determinants of capital structure. So my economic variable is, my economic model, I am constructing an economic model for this one. It's simple, nothing. Okay, why is the leverage? Why is a capital structure? Okay, debt equity ratio, leverage ratio. Okay, y is equal is a function of x1, x2, x3, x4. When you write up the exact variables there, it would look like a model for an economic model for estimating, or economic model for examining or identifying the factors, the determinants of capital structure. X1 is profitability, X2 is tangibility, X3 is liquidity, X4 is growth, X5 is size of the firm, X6 is dividend, X7. These are theory-led or previous empirical studies-led variables. That is what is theory. Theory doesn't mean that only those which have been labeled by theory. What exactly the existing body houses, that is theory. That is theory. When you find something, you will be adding to the theory. Theory, it means that the body of knowledge. Okay, in that sense you take. So you can call these are theory-led variables. Okay, I suppose you are choosing these three theory-led variables, and you have written this leverage as a function of 7 variables. You can call it, or when you come up with your research, you have to specify your economic model. Economic doesn't mean that it is a measurement model. That is why that is what it doesn't mean that the variables here are macroeconomic or microeconomic variable. No. It means that it is something for measurement. You have written here as, and from this, for your research, you have to come up with an econometric model after you specify your economic model, which will specify the dependent and the independent variables. Then you have to go for an econometric model which specifies the measurement. It means that all the variables there, all the variables in the economic model, you would be rephrasing into into variables which could directly capture the data for it. Okay, so econometrics, from the term econometrics, we would be understanding econometrics. It is all about the economic measurement. It is all about economic measurement. So it provides, since it is economic measurement, it provides estimates. We would say that it provides estimates for examining or for the economical or the relationship between financial variables. I've told you the finance research is examining the interrelationship of variables or the influence of one variable on other. So this econometrics will provide you the mechanism, will provide you the tools for estimating those relationship. It's simple. What I'm telling you is about regression. Okay, fundamentally. So this the economic model may contain what would be there, and that it cannot be directly observable. Some of those variables cannot be directly observable. So you will add up proxies in the econometric model. So what I'm telling you, in the econometric model, the direct the variables which could directly capture what exactly you want to capture will be included in the econometric model, because it conveys what exactly what exactly to be estimated. You can see here the econometric model for determinants of capital structure. I have written here there in the economic model it was leverage. When you read theories, you will come up with your dependent variable and the independent variable, which will explain the relationship between them. So you will be coming up with the names of those variables. When you write it as a function, you can call it an economic model, and you have to convert it into the econometric model. Here, the econometric model for determinants of capital structure is there. So debt equity ratio is a measure of leverage. And I have given the estimates as betas there. Okay, these intricacies we will not be discussing. So the first one is the profitability. The profitability. How do you capture the profitability? It is earnings after tax divided by total asset will give you the numerical number which capture the profitability. And the second one is total fixed asset divided by total assets. So that numerical number that will capture the second the tangibility aspect of the total fixed asset divided by total asset will give you the tangibility variable included in the economic model. So the next one, the CL divided by CA divided by CL, the current assets divided by current liabilities, that will capture the liquidity aspects. The growth aspect will be taken care of by the change in sales divided by base sales, the growth rate in sales. Okay, that growth rate is the variable included in the econometric model. Okay, so log of total assets is taken as a log of total assets. Okay, it is taken to represent the size of the firm, to represent and dividend payout ratio is the dividend payout of the in the case of the companies will be taken care of by this dividend per share divided by EPS. Out of some EPS, how much dividend is paid per share. So this is a way you could express your econometric model. You conceive or you will be formulating an economic model from the theory. And then when you go for estimation, you have to convert those economic models into econometric model for estimation. And in that model, when you study more about economics, or you will be knowing the unobserved factors or the error term would also be included in the estimation equation. Those things are out of the purview of today's discussion. Okay, so so you have to start from a theory, you have to make an economic model, convert it into economic econometric model, then you go for collect your data, go for estimation of the relationship between the variables, and come up with you have to relate it with the already established outcomes, and you have to agree or disagree, falsify or refute, or you will be adding something new to the existing body of knowledge or finance. Okay, so this is so. Finally, we will be discussing about the barriers to finance research in the context of developing nations. One is the lack of interest among the researchers. This interest aspect is a very important ingredient for the development of finance research. What I would be, what I mean here is, suppose those who are undergraduating or those who are at their post-graduation levels, even teachers, we people, an example, we would be discussing them with these theories, but we will never touch or never try to to give a spark to do some empirical research, or we will never speak about the empirical aspects, or testing and retesting those theories, those interrelationship, that we won't speak. So the people who are destined to do finance research, they lack the previous knowledge or previous interest to pursue it. But if we give a spark, there can be some interest for the for some of the students or who are expected to do research in finance. What I would like to convey here is, those who claim that their specialization, these are the cases familiar to India, even though this may be, sometimes this may be the case with other places also. What I am telling, with my close experience, I could say that whether while we impart the knowledge in finance in different or through different courses, that is what I mean, through different courses, in the sense financial management, financial markets, this derivatives and so on, whether you are inculcating an interest in the student just to compute or just to know what exactly part of this theory, or whether you are trying to arouse an interest in them to examine these things with financial data, that is a big question. So this lack of interest, even those who have specialized in finance, they claim that, or their certificate for PG, post-graduation, may be claiming that he has a specialist in finance. But unfortunately, when he goes for research, when he goes with the aim of adding something to the body of knowledge, he would be choosing some other domains, in the sense that some other branches, not finance, to pursue with their research. This is a common case. So, this lack of interest may be on account of many reasons. Okay, so what I am telling, those who have already pursued their research in finance have a responsibility to speak to the prospective researchers about the need for coming into the finance research, so as to nourish it to the expected level in their respective context. If it is India or if it is some other nations, what I am telling, the people there are responsible for this. Then The theories, if you look into, you all people may be knowing, the Durand has come up with net income approach, and the same Durand has come up with net operating income approach, which is exactly contradicting to each other. So this contradicting nature of theories are giving some difficulty for the for some people to jump into the finance research. So they are to some extent negatively motivated on account of these contradictions. There is no meaning in that. Still, these are some of the experiences which I could get from some of the researchers. I'm not generalizing these things. With reasonable amount of substantiating evidences, I could say that this contradicting nature of theories are putting some difficulties on researchers, and they will be looking for soft zones or safer zones for perceiving their research. Then, if you look into you just take the publications appearing in Journal of Finance, Journal of Financial Economics, and so on. It is very difficult to understand, because it is mathematics. The base in mathematics is essential to do. If you have to fruitfully contribute to the domain, your mathematics is, the skill in mathematics is very important. So this quantitative nature of finance, research brings it is something hardship for many people to come into this finance research. Then data access, data sufficiency, in terms of sufficiency and efficiency, what I'm telling you, if you want to examine the price, stock prices, what you will be doing, you will be visiting the Yahoo Finance site, and the frequency of the data provided in for the stock market prices, it is daily, weekly, monthly, and yearly data. But if you visit Bloomberg, second by second, how the prices are moving, you will get. But the people from most of us may not be having entry into those kind of data providers, because it is so costly, and none of our institutions, whether it is a university or some other research institute locally, they may not be. So we do have constraints. But now there are many ways to overcome this. Still, the sufficiency and the efficiency. Most of the people who are doing research, and especially this corporation finance, they would be relying on the prowess of Center for Monitoring Indian Economy, the prowess website, where from you could get the details regarding the corporates, the variables relating to corporate undertakings, the profitability, liquidity, the asset size, market size, and so on. So there also, what exactly the province is providing. Sometimes the province may be providing for a particular company from 1995 onwards. For some other company, it may be providing for from 1970 onwards. So you have to limit yourself to the availability of the data from them. And can you think of some other source other than this prowess? Sometimes you may be convinced that, or you will be convinced that no other sources are sometimes available. Okay, so this is what about sufficiency and efficiency. It is an issue for finance research. The misconception about the finance domain. As I said in the previous case, somebody is doing something by taking some financial variable, and it doesn't try to establish an interrelationship or relationship between those variables. And if he claims that it is finance research, it is a foolish thing. It is a foolish thing, because you must you try to understand what which type of research, or when what do you do. It can be considered as, what can be considered as your research in finance. So this misconception will enable you, or will lead you to claim that your research is in the finance domain, but it may not be like that. It may not be like that. It is away from the finance research. This misconception must be removed. So lower participation of people in the stock market. If you take the case of US, nearly 70% of the people have investments in the stock market. So if you sample as part of behavioral finance, if you try to sample, make a sample from US, it is very easy. But in the case of India, and less than 3% of the people invest in stock market. And if you take the demat accounts, 75% of the demat accounts are dormant, or the frequency of the transactions in the demat account is very high, in the sense that once in a while transactions are happening. So these kind of this is particularly regarding this stock market. This is the case. So this meager involvement of the people in the stock market is a barrier to research with regard to stock market behavior and so on. Then the level of financial literacy, is an ingredient, or is an indicator of finance research, in the sense that lower literacy, it may hamper the growth of the research in finance. Then if I give a roadmap to finance research, first I would say everybody in the field of finance must try to foster interest in finance research. If you are in the domain of, there is a mistake here, please forgive. If you are, yes, right, research, if your domain is finance, so that kind of a fostering is essential, because in my case, even though I am not so an expert in finance, I don't have such a tall claim. Even though I have been deemed as named as professor of finance, still I do believe that I know what I know is bit. Okay, and what I day by day, minute by minute, what I would be trying to add something more to what is known to me. That is the only possible way, because the field is so dynamic, so fast. Okay, globally, yes. So foster interest in finance is the responsibility of everyone who joined here, who deals with the finance field. Then you have to look for, when you do the research, or when you get it done by some others, including supervisors, what I am intending, you must look for literature at the right place. Where do you research? You call it's journey from known to unknown. So where do you look for knowing what exactly so far known is very important. So you must look for how many of you, suppose as I raised in between a question, those who have done their research on capital structure theories or capital structure. Okay, have you ever gone through this iconic work of Raghuram Rajan? Okay, how many of you have gone through it? Okay, even whether you are pursuing research on it, or otherwise you are in the domain of finance, how many of you? Okay, how many of you have gone through the modern portfolio theory, which has been published in Journal of Finance? So where do you look for is very important. You must look at the right place. Okay, what is the right place in terms of quality? I have explained. Okay, in the beginning. So where it appears. So you must look for knowing the known. That is very important. You must look at the right place for knowing what exactly is so far known. Start from there. Then you must, if you try to learn theories in terms of phrases, broken words and sentences, short notes, it will not bite. So you have to learn theories in its essence. It will take time. So how many of you spend time, how many of us spend time for learning theories in its essence is very important. So if you at what level of knowledge are you dealing with? If you try to just understand a theory, and understanding a theory, are you thinking to apply it in that is another level higher it. And after application, whether you have a criticizing ability, that is another level. So I'm talking about when you try to understand a theory in its essence, this application level capability, this criticizing capability would automatically be built in you or inculcated in you. So learning theories doesn't mean that you read a theory from the top to the bottom. No, you must develop these possibilities. These possibilities, then only it can be considered as learning theories in its essence. So improve basic mathematical skills. Develop. It is self-explanatory. I'm not detailing it. Develop awareness on econometrics. That is very important because none of the research paper in finances is coming up with economic estimations. Therefore, it is very important. These uh, at front or at the beginning stage, you may feel some difficulty with regard to it, but when you start learning, it would be very interesting. Then you have to if I say what is important is you have to target the good financial economics journals for dissemination of your result. Remember, if you have to choose the right to choose a financial economics journal to the tune of at least to the tune of a B-rated journal, you have to have a research deliberation of that kind, which has a strong theory foot with empirical evidences. Otherwise, it would not bite. Yes. So, what there is a tendency which I have noticed, and also some experts we have shared those who are pursuing research in finance, they will take articles. Some articles from some journals. The study might have been done in the US or European Western context. It has been done, and they will try to replicate that study as such in an Asian context or in the Indian context. I don't think it is not, as I said in the previous point. If you take the US, you can see nearly 60 to 70% of the people have in stock investments. They are investing in stock market. But in the case of India, meager percentage. So a study with a design which is suitable for a context like US and Europe, you don't try to replicate that study as such in the Indian context. So you have to suitably modify it. You have to think about whether that context is relevant here, and without verifying those things, if you try to replicate that study in the Indian context, that would be something an exercise, but not a relevant fruitful exercise which could contribute to the domain of finance. So your major
Hello? Hello? Hello, sir. Your voice is breaking. Hello? Santhosh, sir? Santhosh, sir?
Takeaway study. Tell you about it. Hello? Hello?
Yeah, sir. It was breaking last. Repeat the same.
ഈ സ്ലൈഡ് മുതലാണോ? ഏത് സ്ലൈഡ് മുതലാ?
This one, sir. This one. Yeah.
This one. Okay. Yeah. So, finance research, it tests theories or some relationship, as I said, a relationship between the common sense variable you have chosen for your research. Can you hear?
Yes, sir. Perfect.
Hello?
Perfect.
Yeah.
Yeah, perfect.
So using, I'm concluding. So using econometric models, you will be estimating the relationship among the variables, so that you will confirm the theory, or you will be falsifying the theory. And this is what, in the case of common sense relationship, and you have estimated using econometric variables, you have to give a backward, you have to relate those relationship with the existing theories available. This is what is the backward linkage to be provided by the researcher. Otherwise, how the outcome can be meaningful, it's a doubtful affair, I would say. So this is the takeaway for you. The finance research for testing theories or testing some relationship using econometric models, confirming or falsifying the existing theory, or providing a backward linkage to the theory. So this is all about my words for this roadmap to finance research. So these are my recent research in finance. One is Ethereum. Ethereum is a cryptocurrency better explained by Bitcoin and Ripple prices. An ECM approach on the COVID-19 episode price data, which is accepted for publication, means pending for publication, accepted for publication in an InterScience journal. Another one is cryptocurrencies and market efficiency, which is published in Artha Vijnana, which is a UGC careless journal. And another one, capital structure, all are in 2021. Capital structure, asset structure, and profitability of rural women micro enterprises in Journal of Rural Development of NIRD. It is a focus in text one. So with this, let me close my speech on this. So now you can place your questions in the chat box, or you can raise your queries. I'll try to answer your queries.
So participants can
Sir,
unmute your mic.
Is it okay?
Yeah, okay, sir.
Yeah.
Participants can unmute your mic and ask questions right now, or put it in the chat box. So we have one question in the chat box already.
Yeah, can you read that question? Otherwise, yeah.
Okay, sir.
Yeah, I will.
Sir, there is a question for you from Kartika, and the question is regarding your mentioning about the importance given for the theories for further research. So, what is your stand on certain theories which become obsolete after a particular period of time?
Yeah. Okay. It is. I have told you that theories are for when you come up with a theory or any scientific research. When you come up, something is to be considered as a scientific one if it admits the possibility of falsification. So if a piece of knowledge is not admitting the possibility of this falsification, it cannot be considered as a scientific knowledge. This is one of the tests applied for distinguishing a scientific knowledge and an unscientific knowledge. So the theory is put forth by researchers over a time. It is meant for falsification or refutation. When it is refuted with significant amount of evidence, it becomes obsolete. That is quite natural. This is how a domain or a branch of knowledge is. Okay, there was a time, there was a time. Large majority of people, I don't claim that it is scientific evidence. Large majority of the people were believing that smallpox is caused by the wrath of goddess. Okay, but later, with scientific evidence, it is an infection. It has been brought in. I'm not saying that the previous one was scientific knowledge. Like that, with some form of evidences, because it is based on probability, you will be bringing up something. Okay, scientific knowledge is brought in terms of probability. So it admits the probability of falsification also. So theories may sometimes die over time. That is quite natural. Yes. Hello?
Yeah.
Yes,
Did
sir.
you
Can I ask
did
one
you
more
hear
question?
did you hear that question?
Yes, sir.
Yes,
Somebody is trying to
please.
ask. Somebody is trying to ask questions.
Yeah. Sir,
Satyam,
what do you see now? The last slide, or what do you see now?
Please place your questions in the
Hello?
chat box.
Yeah. Okay. No problem. Some issues were there with my computer. That's why I asked. Okay. So next question, sir, please.
sir,
Yes,
sir,
we can hear.
am I audible? Okay. With regard to this particular question, theories like theory of
Yeah.
planned behavior, some journals are not accepting if we are doing a paper on this particular theory. And the reason they are saying is many papers have been done in this particular theory. So you have to try another one. I felt
Okay,
that
theory of okay. Okay, continue. Please continue.
but I felt
Finish your
that
question,
in
please.
every time some theories are always relevant, because especially with regard to behavior or attitudes, planned behavior are always relevant, but still some journals won't accept certain theories only because of the reason that it is overused. So in that sense, I have
It is overused. Yeah, that is quite natural. Simply repeating and repeating. Because research, why do you do research? Because you have to bring something new. Okay, even though theories must admit to the possibility of falsification over time, when a sizable number of efforts have been made by researchers, then again doing that, you can do no problem. But it is up to the publishing platform to decide whether their publication platform be used for this repeated publication, or they must go for something new, because it depends on the supply. When the new knowledge supply is more with regard to this one, if you are repeating which has been repeated by 10,000 people, yes, definitely the platform has. It doesn't mean that your research was not meaningful. No, your research is meaningful, but whether that it is acceptable to that platform, what is their criteria? They would always be trying to push up the rank of their journal. In which way? A journal. I'll tell you one example. During this March, this 2021 March. Okay, I can tell you one of the top journals in the medical field. The publisher was Emerald. Okay, the article was accepted. The article received today. An article received today. It is accepted for publication on the day itself, and that publication, the content was made public within 7 days. Can you imagine a research work which is sent to a publication platform, which is a world-renowned one, get it reviewed and accepted on the day itself, and it is get published in a top-rated journal within 7 days. You think about the possibility. You think, I'll tell you one of my research scholars sent an article on this market efficiency of Bitcoin to Finance India. The paper got published in the last or 2 months back. You know why? When it is going to be published, it is going to be published in 2024 March. It is lined up for publication. You think about, I'll tell you what exactly the research was. The research was the virus, the COVID-19 virus. How long time will it survive in a surface, suppose metal or cloth, or in a painted wall, or in a plastic body? How much time will this Corona-19 virus COVID-19 virus would be alive on different? It was a new knowledge. Nobody so far know it. Okay, it was a good piece of work. That is why it has been got with the procedure was right. The peer review was over within us, and within no time the article get published and it is made public for reading within a short span of time. So this is what is when I teach research problem, I used to quote this example because a research problem should be like that, like this. Okay, hello. So it is quite natural. Suppose if you take efficient market hypothesis, I have told you it has direct citation for that 1970 work, 33,000 something. Okay, what does it mean? What does it mean? Okay, large number of books have been done by different researchers on efficient testing the market efficiency, at least weak form of efficiency or some other form of efficiency. What does it mean? Again, the publication platform of a platform which is of a renowned one, which looks for new knowledge, sometimes may not accept it. Okay, yes. Hello?
Yes, sir. Yes, sir. There is another question.
Yeah.
Read it out.
Yes. So there is another question.
Yeah.
Okay, so there is a question from Prasida that what would be the advantage of testing the theories and models that are based on some rigid assumptions which are not suitable according to the ongoing situation?
Okay. All these theories, all the theories, you don't feel that. What is, I have in between, I have told you, the tested relationships available in the existing body of knowledge is called a theory. It doesn't mean that, it doesn't mean that it is something labeled as theory. What I am trying to convince you, a theory, as you said, maybe over time the assumptions you take care of. You may be targeting this capital structure theories which has no tax assumption and so on. Okay, that is a base for establishing the relationship. In which way you model to capture those relationships. For example, when you try to identify the determinants of capital structure, you will be incorporating all those variables to the maximum possible from the available literature. Available literature means the theory plus the empirical evidences emerged over time. That would also be net addition to the theory. Okay, that would also be taken care of. So it doesn't mean that the theories are over time falsified. It means that you have to take those falsification also into consideration while you proceed with your study. You have to update the field, and with that updation, from that updated version of the body of knowledge, you must start from. That is what I meant. theory base means strong literature base. That is a correct explanation for it. Hello, are you satisfied?
Yes. Thank you, sir.
Hello.
So we have another
There is
question.
one. Yeah, there is another question.
Yeah. I
So the
didn't
question
hear
is,
the
if
question.
somebody intend to study the challenges and potentials. Yeah. Hello, sir.
Yeah. Yes, I can hear.
Sir, am I audible? Okay. So the question goes like this: if somebody intend to study the challenges and potential of some policy reforms, after the completion of the study, the scholar may submit the thesis. But due to the university procedures, it will take more than 1 year for the completion of the valuation and open defense. So what to do if the reported challenges and benefits are obsolete at the time of public viva voce? Will the thesis become obsolete?
Oh, I think this is a question which is, I think this is a question towards the system which is in existence. I think this platform is not a relevant one to answer this question. I do understand the strong sense of reporting of the negligence in the system, but I don't wish to reply for this. Sir, isn't it?
Right, sir. Right, sir.
Yeah,
You're right.
yeah. Yes.
Yeah, may I ask a question, sir?
Yeah, yes, sure, sir.
So thank you, sir. Good evening, sir. It's a wonderful session. A lot of
Okay, thank you.
questions have been answered by your session, sir. Thank you very much.
Yeah.
I'm trying to understand two important questions. The
Yeah.
very first one is, how do we map a particular theory with an existing phenomena in a research, in a financial research especially? And the second question is, while I was attending some workshops on
Sir,
econometric tools,
yeah.
The expert usually told that first of all, look at the data and then go with the research. So now my question is, should the data come first, followed by the theory, or theory followed by the data in finance research? And if you follow the theory, the variables used in Western context might not be available in another context like India. So how do we address these two problems?
Yeah. So first of all, in your first question, I didn't understand what exactly mapping, right? You used a term mapping, right, sir? Hello?
Sir.
First question I didn't get.
How do we map a particular theory with an existing phenomena in finance research? Say, for example, sir, the stock markets are becoming more volatile and they're behaving in asymmetric manner. So I thought I should understand there are different theories that are coming in the stock markets, like arbitrage pricing theory, Markowitz theory, like that. So how do I know this particular theory fits to this particular phenomena?
Yeah. Okay. My answer to this question is, as I said, when you choose an area for your research, so it is in all, including yourself, myself, and all other teachers who are talking about research will say that it is a journey from it is a very local explanation. It is journey from known to unknown. So what you have to do, you have to understand all these theories. You have to learn. That is what I have given as one of the points in the roadmap to finance research. Learning the theories in its essence will give a hand for you in finance. Simply if you have a certificate led specialization in finance, that may not be enough. So understanding the theory, just reading is not enough. So how do you understand a theory in essence? and then you try to re-examine or validate it with the data available. That is what is the you have to do. This is my answer to your first question. The second question is data first or what is that? Tools first. Data first or
Theory first.
yeah, data. It is normally if you want. This is a practice among those who are providing a professional service to the researchers. They will there is a kind of this is not possible with good quality publications because you have to supply the data with source of data to them, but in some cases people are doing they will manipulate, especially in the case of primary data, to get the desired result. There can be some form of manipulations, but in the case of finance research it is not possible because to a larger extent the finance research is happening with the help of happening using, not with the help of, but happening using secondary data. So I have asked a similar question to one of the experts who are in who are into econometrics. What I did ask, a multicollinearity issue when you load your econometrics, your econometric model with more number of variables, there can be an issue. There can be an issue which we call it multicollinearity, right? Hello.
Yes, sir. Yes, sir.
High correlation among the independent variables. High correlation among the independent variables. The right side of the equation, they are highly correlated. If two independent variables are highly correlated and if the correlation is supposed to be 0.99, what does it mean? Exactly if two variables are highly correlated, it means exactly that variable is same. Okay, but the explanation given by that expert was it is a will of the good. The data is like that. Okay, you cannot cook the data for others. So data first or theory first means you are trying to, from theory, you are moving with data to bring something. That is the order. From theory means existing body. Using data, you try to bring something. That is the order, I would say.
Yeah, in that scenario, sir, if we go with the theory and then data, the theory was proposed and tested in a Western world. And that sort of data relevant to the particular variable might not be available in Indian context, for example. So how can we address this problem?
Okay, that is what I said in my last but one slide, because you think about if you try to test some relationship which is worthwhile in a context and try to test in a context which is not worthwhile, the result, there may be some results from that. The fundamental question is not about testing the tool and something, whether it is appropriate for testing, whether the context is appropriate for testing that relationship. That is what I am trying to convince you. Whether the context is appropriate, in which way you justify that relationship be tested here. That is what is the crux of the point.
Thank you, sir. Thank you very much, sir.
Yeah.
It's a good learning from you, sir. Thank you very much.
Thank you. Thank you. So shall I stop?
If participants don't have a question, then we can stop. Anybody have questions? Am I audible?
Yes.
Yeah.
Sir, yes, sir,
Yeah. So, before the formal thanks, I would say that it was a highly intellectual question which comes out from Professor Santhosh Kumar, sir. The lecture was started from the philosophy of finance research, and the lecture really a motivation to the scholars who are in the area of finance research. And actually, we are witnessing scholars and the topic and title reflecting finance area, but actually they do it with the help of a cross-sectional design. So that is a real problem which we are witnessing right now. So many finance titles and topics are doing by the research scholars, but their methodology is not econometrics model or economic model. They are following some cross-sectional design, and finally they submit the thesis. This is a very, very bad condition of research so far, and there is the professor rightly said that there is a debate over what is to be said as a finance research. So finance research should be an interrelation between two variables that should be taken account to be treated as a financial research. And the professor explained there's importance or the more citation which comes out of from finance areas journals. So we should focus on the publication of more papers in financial journals. And we had a discussion on over-researched and under-researched topics. And we had a discussion on the theories and obsolescence of theories and the contradiction of theories and conflict of theories, etc. So really, it was a wonderful and high booster for finance research scholars. So on behalf of the Department of Commerce and on behalf of the entire participants, I extend my sincere thanks to Professor Santhosh Kumar to start.
Okay, sir. Thank you very much. Thank you very much. Thanks to the participants for the patient listening. Yeah. Thank you.
Over to Bhagwati.
It was truly a blessing, but truly Dr. Dr. out at the with us. Though we had some technical issues, the forcing their and never after was. I would like to extend my sincere gratitude to you, sir. Thank you.
Yes, sir. The voice was breaking. So it was.
Shall I leave?
Sorry, sir. The voice was breaking.
Yeah. Yeah. Shall I leave?
Yeah. Thank you, sir. Yeah. Yes, sir.
Okay. Thank you. Thank you very much.
Yeah. Thank you, sir. Thank you, sir. Good night.
Good night. Good night.